Over the past year, I've financed such a variety of businesses. Over the past year, I've financed such a variety of business loans that there's no cookie cutter in my toolbox. I've financed over $7 million in business loans so far this year, and of that, half were SBA loans. Some were startups, but a majority were working capital loans. So when I say I've seen it all, I have. From the $5,000 line of credit to a $450,000 startup loan and everything in between. From a $5,000 line of credit to a $450,000 startup, all the way to $1.3 million in equipment refinancing. That's why in this video, I wanted to share some of my best secrets when it comes to obtaining a loan for your business. That's why in this video, I wanted to share some of the... Hey boys, I'm just recording a video quick, okay? Freezer. Thank you. Okay. That's why in this video I wanted to share some of my best secrets. That's why in this video I want to share some of my best secrets when it comes to obtaining a loan for your business and what are the pitfalls that could lead to a denial. I'm not going to say watch till the end to get to the best part. I'm just going to give you a list. I'm not going to say wait till the end for the best part. I'm just going to give you the list ahead of time. Hope you stick around for the explanation, but either way, thanks for checking out the video. So the topics I'm going to go over are knowing your credit score, knowing what you want or don't, understanding your numbers, what your business cycle is, having a plan, knowing your debt, knowing your assets, and knowing your business. On this channel, I talk about all things that are money with the emphasis on small businesses and SBA. If that sounds like something you might want to be interested If that sounds like something you're interested in, I invite you to subscribe. If not, no problem. We can still be friends. This year has been full of unexpected circumstances, both in the economy and in finance. We've seen rates go to the highest level in years and also begin to decrease. During this time, we've had record inflation and all sorts of other stresses on the business. But during this time, I've also seen an overwhelming amount of requests for working capital, refinancing, and even business startups. The biggest, and I mean the absolutely pivotal point, is your credit score. You have to know exactly where you are, not only in the number, but what's driving that number. Do you have collections, repossessions, tax liens, or anything else that's going to come out? Don't hide them because they will come out, and when they do, you are probably going to get denied. So the way to mitigate this is grab your free credit report. If there are issues, start to work on those before you talk to a lender. I cannot stress this enough. This is the number one reason why any of my loans get denied. I cannot stress this enough that this is the number one reason why any loans get denied in my world. One of my first questions that I usually ask when I'm talking to a potential client is, what are your overall goals? Usually when we get a request from SBA Lender Match, it's going to state something like working capital, refinance, equipment. But a lot of times it's not until I have a conversation with the business that I determine exactly what they're looking for. Most of the time, all the requests are just going to come in with long-term working capital. But after a conversation, we get them into an equipment loan, or we get them into a line of credit and a term loan, a little bit of both, but it's that way of making the business in the best possible shape. Understanding your numbers is a very important part of the process. Maybe not as detailed as your inventory turn ratio, but having a good understanding of how your cash flows in and out of the business is a good starting point. Do a lot of your customers pay on terms, or do they expect to receive payment when the goods are delivered? Do a lot of your customers pay on terms, or do you expect to receive payment when the goods are delivered? If you're a service business, do you allow customers to pay with credit cards, check, cash? Do you know the percentage of each type of payment you receive? A lot of the answers to these questions gives the lenders a good idea of how your cash flows and also what your needs are. This is also going to talk into your business cycle. Is your business seasonal, or do you have constant sales throughout the year? There's no right or wrong answer, but you do need to have some sort of answer for this. Before you talk to a loan officer, before you talk to a bank or a loan officer, take the time to think about how your business operates and see if there's seasonality. When you're in the business, you may not be seeing all the things that are going on because you're busy taking care of the business itself. So next, you're going to have a plan. Not necessarily a business plan. If you've been in business for multiple years, you're not a startup, most of the time they're not going to ask you for a business plan, but they are going to ask you to lay out how you're going to pay the loan. They are going to ask you how you're going to pay the loan back. Is it going to be paid back through a large contract that you're anticipating? Will it be paid back out of your accounts receivable, or will it be paid out over time? Again, the answer to these questions are going to determine whether you need long-term working capital, or you need permanent working capital, or do you need short-term working capital? A lot of the answers to these questions is going to determine whether you need long-term working capital or permanent working capital, or do you need short-term working capital, such as a line of credit. Having the best answer and anticipating the lender is going to ask you, having the best answer and anticipating what the lender is going to ask you is going to get you a lot. Having the best answer and anticipating what the lender is going to ask you is going to get you a better outcome in the end. Next, you got to know your debt. You have to know exactly who you owe, how much, because most lenders are going to take that debt schedule that you're going to fill out, whether they have a template or you create one or find one on the internet, and they're going to look at the loans that you currently have, what the interest rates are, the terms, and they're basically going to say, hey, can we refinance this to save you some money? Or can we do this to lower your payment to help you out? But it's also the biggest way for them to get a good indication of your debt service. If you're going in for a working capital loan and not if you're going in for working capital and not a equipment loan, you're going to want to look at what assets are on your balance sheet in comparison to your liabilities. If your balance sheet is underwater, meaning you owe more and your liabilities are higher than your assets, that could be a red flag for lenders. Now, it also depends on what type of structure you have in your business. Are you an S Corp? Are you a DBA? For both of those entities, you don't keep a lot of equity because there's no point in it. You're paying taxes on the personal level. But again, this is something to discuss with your accountant or your attorney. And a good practice is to go over your financials yourself before giving them to a lender to make sure that you can mitigate any questions they may have. The one answer a lender never wants to hear is, I don't know, it's my accountant. You are ultimately in charge of your tax returns, so make sure you feel comfortable with those numbers. And finally, you want to make sure that you know your business, making sure you feel comfortable enough talking about how your business operates, not just financially, but also day to day. The chances of your lender knowing a lot about certain industries is probably limited. Because I wasn't always in banking and I worked a lot of blue collar jobs, I know a lot of different businesses, so I use that as an advantage when I'm talking to business owners. That way they feel more comfortable because they're not coming in trying to describe what they do. I'm definitely probably an outlier in this space in the fact that I know a lot of different businesses and how they operate, as opposed to the next banker on the street. Things that just come natural to you, such as terms in your business, may need to be spelled out and explained in more detail so the banker understands. Try to minimize the amount of acronyms that you use or shortened versions of things because they're probably not going to understand what you're saying. Overall, you want to make sure that you have a good rapport with your lender. Overall, you want to make sure you have a good rapport with your lender because going into this at the end of the day, you have to feel. Overall, you want to make sure you have a good rapport with your lender. Because at the end of the day, they have to feel comfortable lending you money and being assured that you're going to pay it back. If you have any questions during the process, make sure you're asking them. You want to know what the fees are, what the rate's going to be, if there's anything up front, because all of those terms are going to impact your business. At the end of the day, when you sign the documents, you're basically saying, I understood everything that I read. I hope this video gave you a good understanding of what banks are looking for, key information that you should have before going into the loan, key information that you should have before going into your loan officer's meeting, and what exactly you're expecting to get out of the meeting. If you have any other questions about this topic or others, post them in the comments or shoot me an email. I'm always open to help out. I wish you the best of the future in your business, and until next time, have a great day.